So, you've probably heard the news, right? The US economy is looking pretty strong. But here's the thing that's got everyone scratching their heads. If everything's so great, why isn't the Federal Reserve cutting interest rates and giving our wallets a bit of a break? It's a real paradox, and it just doesn't seem to add up. Today, we're going to dig in and unravel why the good news for the economy isn't exactly turning into good news for you. I mean, think about it. All the signs are flashing green. The logical next move, the one everyone expects, is for the Fed to lower interest rates. That would make everything from mortgages to car loans cheaper for all of us. But that's not what's happening. And the answer, as we're about to see, has a lot less to do with spreadsheets and economic charts and a whole lot more to do with politics. Okay, so before we get into the drama, let's just establish how good things actually are. We've got to look at the US economy's report card. To really get why the Fed is in such a tough spot, we first have to understand just how strong this economic boom really is. Let's start with jobs. An unemployment rate of just 4.4%, that's incredible. It tells us that the labor market is super robust and stable. People are finding work, companies are hiring, and the very foundation of the economy is solid. This is textbook good news, folks.
And look, it's not just the job market. The entire economic engine is humming along. We're seeing really impressive growth in the gross domestic product, GDP. That just means the country as a whole is producing more stuff and more services, which is a classic sign of a healthy, growing economy.
And what about the big one? Inflation. You know, the economic boogeyman that's been making everything feel so expensive for the last few years. Well, the good news is it's finally starting to weaken. The rate that prices are going up is actually slowing down. This has been the Fed's #1 target, and it really looks like their whole high interest rate strategy has been working. But there's a kind of secret ingredient in all this success, a massive, and I mean massive, surge in productivity. Thanks to all the big investments in technology and AI, we're just getting way more output for every hour we work. This is the magic formula that lets the economy grow without overheating and sparking more inflation. It's basically the economic equivalent of having your cake and eating it too. So let's just recap for a second. We've got strong growth, a stable job market, inflation that's finally cooling off, and a huge productivity boom. It's pretty much a dream scenario. All signs are pointing to the Fed taking a victory lap and cutting interest rates, right? Well, this is where our story takes a very unexpected turn. Because this decision, it turns out, isn't being made in some sterile economic lab. It's happening out here in the real world, where a political firestorm is brewing. And this scandal is completely changing the game. So what's at the heart of this whole problem? Believe it or not, it's the renovation of the Fed's main building in Washington, the Eccles Building. Its budget has absolutely exploded, going from an initial $1.9 billion to a reported, get this, nearly $4 billion. That's more than double the original cost. Now, as you can imagine, the fallout from this has been severe. We're talking serious allegations of institutional corruption. The whole thing has escalated to the point that there's now a leaked criminal investigation, and the Department of Justice is involved. So yeah, this is way beyond a simple budget issue. It's a full-blown crisis. And what does Fed Chair Jerome Powell have to say about all this? Well, he's come out swinging. He's publicly stated that he believes this whole investigation is politically motivated. He's essentially claiming it's payback from the administration because the Fed hasn't been cutting interest rates. And just like that, an internal scandal becomes an open political war. Okay, so a building renovation, a massive budget, a political fight. How in the world does all that stop the Fed from making the economic call that all the data seems to be screaming for? Let's connect the dots. It works like a chain reaction. First, the administration makes these allegations of corruption. Second, the Fed finds itself under a federal investigation. Now, here comes the crucial part. Step 3. If the Fed were to cut interest rates right now, in the middle of all this, it would look like they're caving to political pressure. It would look like they're admitting guilt, or at the very least trying to get the administration off their back. So to protect its independence, the Fed is basically forced into a corner. And that leaves them with really only one move: hold rates steady. So here's the bottom line. All the economic data is screaming cut rates, but the political reality is screaming hold the line. The risk of being seen as giving in, of losing its all-important independence in the eyes of the public and the markets, it's just too high. Politics has effectively slammed the brakes on economics. And this high-level political drama, well, it has a direct and very real impact on every single one of us. So let's break down what this political freeze actually means for your personal finances. This slide just lays out the disconnect perfectly. Based purely on the economy, the markets were expecting to see interest rate cuts coming in 2026. But the reality, because of the politics, is that we are likely looking at higher interest rates for a lot longer. The market is now pricing in pretty much a 0% chance of a rate cut happening anytime soon.
So what's the takeaway for you? Well, first off, borrowing money for big-ticket items like a house or a car is going to stay expensive. Second, those tech and AI sectors that are driving all that productivity, they're probably going to continue to see a lot of strong investment. Third, with rates staying high, bonds actually become a more attractive place to put your money. And finally, and this might be the most important one, the biggest long-term risk here is that all of this starts to erode public trust in the Federal Reserve, which is one of our most critical economic institutions.
And all of this leaves us with a really big, lingering question. We count on institutions like the Fed to make objective, data-driven decisions that keep our economy stable. But if politics can just step in and so easily override crystal-clear economic signals, it raises a much bigger question about the future and who we can really trust to manage it.